He was fired, not after failure, but after success. They handed him a $10 million check like it was closure. But what they didn't realize, they weren't paying him to leave. They were funding the creation of a rival empire. And years later, the same Wall Street system that pushed him out would quietly depend on him to survive. This is not a story about success. This is a story about revenge disguised as infrastructure. In the 1970s, Wall Street was nothing like the digital, real-time system people imagine today. It was a loud, fragmented, almost mechanical environment where traders stood packed on chaotic floors, phones were constantly ringing, ticker tapes lagged behind reality, and financial news often arrived through slow brokers, printed reports, or word-of-mouth updates that were already outdated by the time they reached the trading desk, meaning that decisions involving millions of dollars were being made in an atmosphere where information was incomplete, delayed, and scattered across multiple disconnected sources. Bloomberg noticed a critical loophole that almost everyone else accepted as normal. By the time most traders hear news, the opportunity is already gone. He begins experimenting internally. Simple tools, early data systems, faster information flows. At first, people listen. Then they rely on him. Then, they start seeing him as essential. And that is where the danger begins. Because in big corporations, the most valuable person is often the most replaceable. Or so they think. Salomon Brothers was one of the most aggressive and influential investment banks of its time, built in the heart of Wall Street during an era when power didn't come from polished branding or global media presence but from pure trading intensity, especially in bonds and fixed income markets where fortunes were made in seconds. Bloomberg didn't enter this world as an outsider trying to break in, he became part of it at a senior level, eventually rising to become a partner inside Salomon Brothers during a period when the firm was expanding its influence and tightening its grip on how institutional finance actually moved. And in that position, he worked directly alongside top traders and decision-makers who were constantly under pressure to react faster, see earlier, and execute better than everyone else in the market. By the early 1980s, Salomon Brothers was going through aggressive restructuring as Wall Street itself was shifting under mergers and internal power changes on how the future of the firm was being redesigned. Bloomberg, despite being a partner and deeply involved in the firm's operations, was quietly caught in one of these internal decisions. And then came the moment that changed everything. He was told his time at Salomon Brothers was over and handed a severance package worth $10 million, not as a reward but as an exit, and as he walked out of the building, it wasn't just the end of a job, it was the moment he stepped out of the system he understood better than almost anyone still inside it. After leaving Salomon Brothers, Bloomberg didn't rush into another role or public move. Instead, he entered a rare silence that Wall Street never allows while you are still inside it, where for the first time in years he could actually step back and see the system from the outside rather than inside the chaos. And in that distance, he started noticing something no one inside the firm seemed to care about, which was that the real problem was never intelligence or effort, but the way information itself was delayed, scattered, and broken across different channels, quietly costing the entire financial world speed that no trader could afford to lose. By 1982, he had a clear vision. He hired a small, elite team of engineers and rented a tiny office in New York. Together, they began quietly building a secret weapon that would change high finance forever. Bloomberg saw a massive loop that needed to be closed. He realized that data by itself was useless unless it was processed immediately. His idea was simple yet audacious: unify real-time market data, global news, and advanced mathematical analytics into a single, seamless electronic interface. When the first Bloomberg system launched, it didn't just show information, it closed the loop between seeing a market shift and acting on it. For the first time in history, a trader could look at a live bond price, read the breaking news story affecting that bond, and run a complex analytical model to calculate its future value, all on the exact same screen, using the exact same keyboard, in a matter of seconds. By putting the data and the analytics in the same place, Bloomberg completely eliminated the friction of financial decision-making. He gave traders a digital superpower, turning a fragmented, chaotic guessing game into a streamlined, real-time execution machine. By the late 1980s, Wall Street firms suddenly realized a terrifying reality. Bloomberg's system gave users a massive speed advantage. If a market shifted, traders with a Bloomberg terminal reacted first. In a world where milliseconds equaled millions, ignoring this technology was no longer an option. What followed wasn't a wave of adoption driven by clever marketing. It was driven by pure, unadulterated fear. Firms bought the system simply because they couldn't afford to fall behind competitors who were already operating faster. As major banks and financial institutions scrambled to install the system, Michael Bloomberg didn't just scale his product. He locked it directly into the daily habits of the financial elite. By the early 1990s, this structure began compounding into something far larger than a standard software company. Every new bank or hedge fund that joined didn't just add to Bloomberg's bottom line. They strengthened the network effect of the entire ecosystem. The terminal rapidly expanded outward from trading floors into investment banks, hedge funds, government institutions, and global financial media systems. Quietly and systematically, what had begun as a single, simple solution for an information delay had transformed into a global infrastructure layer. Michael Bloomberg had successfully built the machine that controlled how the entire financial world saw, processed, and reacted to reality in real time. 7. Today, Bloomberg LP stands as one of the most dominant financial information infrastructures in the world, with hundreds of thousands of terminals embedded across banks, hedge funds, asset managers, corporations, and government institutions, where it continues to function as the real-time backbone of global markets by delivering pricing data, news, analytics, and communication tools that professionals rely on every second the financial system is active. And what makes its position so powerful is not just its scale, but the fact that it has become so deeply integrated into decision-making workflows that it operates less like a company and more like an essential utility of modern finance, similar to electricity or internet connectivity in how invisible yet unavoidable it has become. And in the end, Bloomberg's story is not remembered as a simple tale of success, but as a quiet reversal of power, where a man who was once dismissed and removed from the very center of Wall Street ended up building the invisible structure that now holds that same world together, proving that sometimes the most permanent empires are not built through confrontation, but through understanding a system so deeply that when you rebuild it, the world eventually forgets there was ever a version. Without you.